Hello dear students, this is Miss Priya. Today we are going to study the classification of accounts under the subject Fundamentals of Accounting. As we all know, accounting is the process of recording, classifying, summarizing and analyzing the financial transactions, which is essential for the business and the individual alike. Accounts play a crucial role in organizing these transactions, allowing for proper financial management and analysis. This video provides an overview of various types of account in accounting and their significance, particularly in the Indian context. In this PPT, we are going to study that accounts has been classified using the two approaches. The first one is the traditional approach and the other one is the modern approach. To the first one, we also call it as the British approach, that is the traditional approach. And to the modern approach, we also call it as the American approach. Classification of accounting under the traditional or we can say the British approach. It has been classified under two, that is impersonal account, which is further divided into the real account and the nominal account. And under the personal account, we are going to study it in the next slide. Under the personal account, we study the natural person, the artificial person, or the group or the representative personal accounts. Under the natural persons, we study the natural human beings. For example, the Kamal's account, the XYZ, whatever human's name we can take, the Mala's account or the Sharma's account we can take. And artificial accounts are those accounts which has been created legally. For example, the firm's account, the limited company's account, the educational institution's accounts, or the cooperative society's account. Under the group or the representative personal account, we take it the example of prepaid insurances, outstanding salaries, outstanding rents, outstanding wages, or etc. we can say. Under the personal account, the rule for this is that debit the receiver and credit the giver. And further, in the impersonal account, we have already studied that it is divided into two, that is real account, which we also call it as the personal account, and the nominal account, which we also call it as the temporary account. Under the real account, we study that it exists even after the end of the accounting period. For the next accounting period, these accounts start with a non-zero balance, which is carried forward from the previous account. Example of such accounts includes the machinery account, the land account, the furniture account, the cash account, and the accounts payable accounts. And the rules under this account which we follow is the debit what comes in and credit what goes out. And the next we are going to study the nominal account. The nominal accounts are those accounts which are closed at the end of the accounting period, and for the next accounting period, these accounts start with the zero balance. Nominal accounts typically covers issues such as incomes, gains, expenses, or the losses. An example of nominal account include the sales, purchases, gains on asset sale, wages paid, and the rent paid. Rules that we follow under the nominal account is debit all the expenses and the losses and credit all incomes and gains. Further, we have studied that classification of account has been classified under the two approaches. The first one was the traditional approach, under which we studied the personal account, the real account, and the nominal account. But further, in the modern era, in the modern approach, we study it in different way. We have classified it in other ways, that is, The first one is the assets account. Assets accounts are those accounts which we use for more than 1 year, we can say, and or that we use it for the further productions. For example, the land account, the machinery account, the accounts, receivable accounts, the prepaid rent account, and the cash accounts. And the second one which we take is the liabilities account. An example that includes the liabilities account is the loan account, the accounts payable account, the wages payable account, the salaries payable account, and the rent payable account. And further, we have studied that we are going to study that the third one is the revenue account. An example for the revenues account is that include the sales account, the service revenue account, the rent revenues account, the interest revenues account, etc. And the further we study that under this there is another account which is called the expenses account. Under this we study or we take the wages expenses, the commission expenses, the salaries expenses, the rent expenses, etc. And the capital or the owner's equity account is the last account under which the modern approach has been classified. What is capital? Capital is the part of that amount which is invested by the owner. And the owner's account, the